Welcome to the daily briefing from interest.co.nz. I'm David Chaston. Today we review the latest Reserve Bank OCR decision, also look at Neville Bennett's latest opinion piece, and we'll wrap up with what the other media are reporting. The official cash rate remains unchanged at 8.25% following today's Reserve Bank review. Bank Governor Alan Bollard said that the outlook for the New Zealand economy and interest rates remains broadly consistent with their view outlined in the September monetary policy statement. The labour market remains tight, domestic income growth continues to expand on the back of strong commodity prices, and core inflationary pressures persist. On the other hand, there are signs the housing market is moderating. The bank said they believe that the current level of the OCR remains consistent with future inflation outcomes of 1 to 3% on average over the medium term. However, they did have some pointed comments to make about the risk to inflation, and we'll look at those after this short break. The Reserve Bank kept the OCR benchmark rate unchanged today, but also highlighted some special risks sort of future outcomes. There was a direct and pointed warning to the politicians about spending up big in the upcoming 2008 election year. Dr. Bollard noted that despite ongoing surpluses in the government's operating balance, current fiscal policy is contributing to inflationary pressure. Any further easing in fiscal policy beyond that already announced will provide even more upside risk to medium-term inflation, he said. Somewhat surprisingly, he also noted there are special risks from the proposed greenhouse emissions trading scheme and rising global food prices. On the international front, while the turbulence in global financial markets has eased somewhat, considerable uncertainty remains. This poses a downside risk to our key trading partner economies. The New Zealand dollar remains relatively high, restraining the tradable sectors of our economy. From their point of view, their inflation-fighting point of view, we are certain the Reserve Bank would not like to see the New Zealand dollar fall below the low 70 US cent level. We have today posted a new opinion piece by Dr. Neville Bennett. He takes the view that we need a more proactive position by our financial system regulators and compares our type of response with those in other OECD countries, especially the USA. All financial institutions are vulnerable to a run on them when confidence is shaken, and it takes only a few to start a run. He makes the point that even the regulators cannot predict when or with whom this may happen, so it's completely unreasonable to expect ordinary depositors to do so, and even more unreasonable to let those that do not start a run hang out to dry when one is started by others. The financial markets are complex, and financial institutions are now expected to manage that complexity with sophisticated management. That makes it even harder for depositors to assess them. Dr. Bennett looks at the struggles to contain the credit crunch consequences in the US and the heady problems being wrestled with by managers of companies in the financial system. A buyer beware hands-off approach may have been okay in a previous generation, but in today's internationally interlinked world, asking the most vulnerable to pay the price of system wobbles is now just plain wrong. You can link to Dr. Bennett's article from the news menu on this website. And finally today, a quick wrap-up of some other recent news. A strict inflation target for monetary policy makes cashing in on the New Zealand dollar too easy for currency speculators, says NZX Chief Executive Mark Weldon. Standard & Poor's may cut the credit ratings of more than 200 Australian and New Zealand residential mortgage-backed securities as turmoil in the US subprime market spreads to home loan insurers. Australia's core inflation rate jumped the most in 16 years in the third quarter, fueling expectations that their central bank will raise interest rates as early as next month. You can get more news and start with Newsmaker Views on our news page. Join us again tomorrow for the freshest finance news on the web. We'll see you then.